7th, big day. Big day. Absolutely ripped apart these SPY options. Guys, I came into the day and I was just focusing on the overall markets. We had a big gap down day yesterday. We rallied it back. We had another big gap down here this morning, and this time there was no rally back in the market. We had a nice bounce back right into the close. But other than that, this market was in complete sell-off mode as trade tensions and fears of no deal and increasing tariffs by Friday continue to spook the market. We had a little bit of a bounce back in the market towards the end of the day. Words that there's confirmation that the vice premier of China is coming to the U.S. for negotiating talks, as well as China is sending their best negotiator in an attempt to avoid tariffs on Friday. Friday is the deadline. Okay, if there's no progress or if there's no deal by Friday, Trump has said that he plans on increasing tariffs against China. It will hurt the U.S. economy, but it will hurt China's far more. China's economy will definitely take a much bigger hit from those as a result of the tariffs than the U.S. will. Still isn't a good thing, no matter how you look at it. Just further deepens the trade war, and I think brings a wedge in between the two sides. But maybe this could be the catalyst that pushes the deal over the finish line, because China doesn't want those tariffs to go into effect on Friday. So maybe this is just what they need to actually get a deal done. Who knows, guys? We will see. But nonetheless, huge down day in the markets today, and I just ripped apart some SPY put options in the morning. I grabbed some more in the afternoon, and they were moving like crazy. I mean, these SPY options had tremendous volume. They were moving, 50, 70% like that. Just really great volatility. And what I'm going to talk to you about today is going to be a technical lesson. I'm going to go over all the trades with you in the SPY. There was really two picture-perfect entry opportunities on this SPY that were textbook technical patterns. So I'm going to go over those two setups with you, and it's the 2 points that I entered the put options. They were A-plus setups. So I'll cover this with you. But also, guys, I want to talk to you a little bit about just being able to understand where opportunity lies. And you guys will hear me talk a lot about how you can't just be a one-trick pony. And that's why in TTG, I really do focus on, and if you follow my channel, you've seen me trade it all. You've seen me trade options. You've seen me trade the TVIX. You've seen me trade small caps. You've seen me trade sub-dollar stocks. You've seen me trade, like I said, the large caps. You've seen me trade mid caps. I trade all of it. And that's because I follow the opportunity. I follow, where I think action will be. And it's important that you do that. Some traders just say, "Oh, you know what? I'm just gonna trade whatever the leading gapper is on the day that has the lowest float, and that's the one I'm gonna trade." And that's great, and that does work sometimes when small caps are in play and they're red hot. But there's other days where there's a lot better opportunity. There's a lot better risk reward. Okay, there's a lot better follow through. There's a lot better momentum. There's a lot better liquidity. Okay, there are times when you should, shift your focus and shift your attention elsewhere. And that's why I teach everybody in True Trading Group to be comfortable with these different asset classes, be comfortable with options, be comfortable with mid caps, be comfortable with small caps, be comfortable with ETFs, be comfortable with all these other things, because that way there's always opportunity. If you only trade one thing, there may be days where there's just no action, there's no opportunity in that specific asset class. But if you're looking at options, you're looking at the SPY, you're looking at the NASDAQ, you're looking at Amazon, you're looking at Chipotle, you're looking at Netflix, you're looking at Tesla. Then on other days, you're looking at Roku, you're looking at Lyft, you're looking at Beyond Meat, you're looking at AMD, you're looking at some other these mid-cap names. Then on other days, you're looking at the small caps, like all those small caps with the low floats, and you're looking at the reverse splits and all of those things. You're bound to find opportunities somewhere. Okay, so that's why you hear me preach diversity. Yes, it's important to have your niche. It's important to know and understand what you're good at and have like something that you specialize in, that you are the most comfortable in, that you're the best at. But it also, if you're going to get to a point in your career as a trader where you're really trying to be consistently profitable and you're trying to grow to the and get to the next level, you're going to have a level of diversity. Okay, and today is a perfect example of that, and it was just a great day. So let's get right to the trade, and let's get right to the markets. So first things first, guys, we have the big gap down. Okay, so here's the big gap down. We roll it over. Okay, we push a little bit off the bell, and then we roll it over and make fresh new lows. What I notice at this point, guys, I sat here and I drew out my Fibonacci retracement level, and I start to notice something that became very clear. So I'm going from yesterday's close down to the current low of the day because there's a gap down. Guys, whenever there's a big gap down or a big gap up, when you draw your Fibonacci retracement level, you need to draw it from that previous close. Okay, you draw it from that previous close. You don't draw it from like the high or the low. You draw it from that previous close. Okay, so what I start to notice here now when I draw this out, there's your initial morning low, and I start to notice the initial morning low lines up beautifully with the 23.6 Fibonacci level, and also lines up with VWAP. Look at how beautiful this of a resistance level this is. You have 4 resistance indicators lining up at this same price point. The initial morning low, okay, the 23.6 Fibonacci level, VWAP, which is the orange line on my screen, and the trade line, which is the yellow line on my screen. Okay, those are 4 resistance indicators that are lining up right above this 290 area. And then you also got a trade line and VWAP crossover to the downside. This was the perfect textbook entry point for the SPY put options. And you guys can see I went ahead and I entered those SPY options right there. I'll take you guys to my trade announcements on the day. I had to break it up into 2 separate screenshots because that's how active that I was today. Okay, here you guys can see, here you guys can see at 9:59. Oh, guys, I traded, I'm sorry. Let me go back. I forgot to mention this. If you watched my video yesterday, I was long BYND yesterday. I got into a full-size position at 69.85 yesterday. And you can see at 9:35 in the morning, I took my final take profit off on BYND at 78. So right away, I'm starting the day in a real nice profit. I mean, what a way to start the day when you wake up and your swing trade from the day before is up $9, from your original entry, and that final take profit at BYND at 78. That stock ended up actually pushing up towards like 85 today, but I got flat there at 78. So that was if you watch my video from yesterday, please, if you missed it, go back, watch the video from yesterday. It talks about the BYND trade and the BYND swing trade. Okay, it talks about it in yesterday's video. So go back and watch that one. And then I took a tier 1 entry on AKRX, guys, and I took a small loss on that because it was just a tier 1 position. In at 343, out tier 1 at 332. If you're not familiar, tier 1 for me is just 25% of my desired position size. So let's say if I want to buy 10,000 shares of something, tier 1's 2,500 shares. Okay, so I took a very small loss on AKRX. Now, 9:59 a.m., you guys can see here I bought the SPY 289 strike, May 8th expiration, put option at $1.04. My stop loss was going to be if the SPY gets above the 290.35 area, which is that previous low. So if the SPY got up into this region, I stop out of those put options. Okay, so there's the entry at $1.04, and right away we roll it over to a new low of the day. So right there on that new low of the day, I took some profit off the table. Back to my trade announcements. You guys can see I took some profit on the SPY 289 strike, May 8th put option at $1.42. That is how quickly these options were moving today. That is how volatile the action was. I bought these at $1.04 a contract, and 3 minutes later, they're at $1.42. That's nuts. Okay, so right there, I took some profit off on that new low of the day. Then as I pan this over, we'll go back to my trade announcements. I think I froze here a little bit, guys. Oh, here we go. Sorry, I froze there for a second. So here you guys can see I took more profit off on the 289 strike May 8th put options at $1.76. Okay, that's just after, that's right here on this new low. So on that new low, and then the bulk of the position's off at $1.76. And then I'll take you back to my trade announcements again. Final take profit at 169 a contract at 11:30 when it looked like we double bottomed here. So at 11:30, you can see here's my, right there was my final take profit. So there's the entry at $1.04, $1.42, $1.76, $1.65, $1.69. Okay, so there's the entry and the 3 take profits on the first SPY put options. Okay, then I actually went ahead, guys, and I tried to catch a long on the SPY. And the reason why I did this, let me explain to you guys the reason why I did this. If you look back over the last 3 weeks, every morning sell-off, the market found a low midday and had a little bit of a relief bounce into the close. Okay, we didn't really have any days over the last 3 weeks. The market sold off in the morning, based, and then sold off further in the afternoon. So what I was thinking to myself was maybe we were down so much in the morning that I was like, if we break below this 288 level and then we just, recover it, okay, I'm going to try to get long for a little bit of a break above VWAP. VWAP was a clear area of resistance. There's your resistance here. There's your resistance there. And here's resistance here. Again, we were not able to break above VWAP at all morning. So here you have this support level that we start to try to base out here at 288. We break below 288 right here, but immediately take it back. Okay, and it's happening right in the middle of the day, which is when I've seen the market in the last 3 weeks put in the low and then have a relief bounce into the afternoon. So I went ahead and I actually bought right there call options in the SPY. I'll take you guys to my trade announcements. Here you guys can see at 12:07, I bought the 290 strike May 8th call options at 79 cents a contract. Stop loss will be if we make a new low of the day. Okay, right away we make a push up here to retest what? VWAP. So I go ahead and I take profit off the table right here. Why? Because I know VWAP is an area of resistance. VWAP has showed it to me 3 separate times already in the morning that there's resistance at that level. So you've got to be prudent, take some profit off once you hit that level. So we get up to VWAP, I take some profit off the table here at 89 cents. Okay, here you guys see, took some profit, 89 cents, still holding some. But then we get rejected again at VWAP. So VWAP held resistance all day, and then we rolled it over. So right here, when we rolled it over and we made a new low, I ended up exiting the rest of that position at 59 cents. So here you can see at 115, I got out at 59 cents. So I'm red on that trade. Okay, I lost a little bit of money on that trade. Okay, but because I was prudent and I took that first piece of profit off the table at VWAP, my loss is now much smaller, because now not only did I reduce my risk on the losing part of the trade, I actually locked in some profit on that first chunk from 79 to 89, which was, I sold 25% of my position in at 89 cents, and then I lost on 75% of my position. So I'm walking away from the trade red. Okay, no doubt about that. But because I'm prudent, taking profits off in front of your first profit target, and you're not being greedy with the trade, it saves my ass on the back end of that losing trade. Okay, so just some position size and some good risk management there. Now, once I see that we are not going to make that, that we are not going to have that afternoon recovery bounce, now it's time to go back into short mode and short-minded, because that was the market's attempt. This was the market's attempt to rally back in the afternoon and get above VWAP. Okay, everybody sees probably the same thing that I was seeing, which was the market over the last several weeks has sold. Whenever you had a sell-off in the morning, it found the low midday and then it had a relief bounce into the close. This was the new low. This was the low that was put in the middle of the day, and you tried to bounce back. That was the market's attempt. When it failed, it's not a surprise to see us to go right from VWAP straight down to a new low, because at that moment everyone realized, oh boy, there is no relief bounce coming this afternoon like we've been seeing the last couple of weeks, and the selling sped up to the downside. Now, let's pan this over. You see we get a new low of the day. Now what I want you guys to do is draw a line right across that previous low of the day. There was your previous low of the day. We broke below it right there after 1 o'clock. Look at how we bounce back and find resistance at that previous low. That is picture perfect textbook. It's so clean. I mean, because it holds almost to the penny. So right there, guys, when I'm seeing that we're having trouble here getting back above that previous low, and we're coming out of lunchtime, we're getting into the afternoon session, it's time to jump in this thing and ride this thing short for a further continuation move to the downside in the afternoon. Please go back and watch my video yesterday because I covered a very specific topic that talks about looking for stocks and how to tell that a stock that was strong in the morning, how to tell that it's going to make a push in the afternoon higher. Okay, this is the exact same concept, just the opposite. Okay, so we always talk about stocks that are strong in the morning. You look for them to hold above key support levels during lunchtime. Those stocks have a really good chance of pushing higher in the afternoon. On the flip side, when you see a stock that's weak in the morning, holds below key resistance levels during lunch, you look for it to continue to the downside in the afternoon. Okay, so that's exactly what happened here. Right at 2 o'clock, right when we're coming out of lunchtime, you see we cannot get back above that previous low, and I go ahead right there and I enter some more SPY put options. Back to my trade announcements here, you guys can see I bought the 287 strike, May 8th expiration at put option at $1.56. Okay, and we roll it over, make a new low of the day. Right there, I take some profit off the table. From $1.56, I take some off at $1.94. Okay, and then you can see we kind of bounce this back a little bit, guys, and then we roll it over again. And on this new low of the day, I took more profit off the table. You guys can see at 337, I sold the bulk of my position at $2.25. These contracts were flying around. $1.56 entry, the bulk of my position off the table at $2.25. And then we started to rip into the close, and I just bailed, break even on that last piece. So you can see I sold out the last piece at $1.56. So I was in at $1.56, sold 25% at $1.94. So 50% at $2.25, and that last 25% at $1.56. But already, guys, the profit was locked in. The entry, take profit, and then there's where I get flat. And this was just a really great day. Just ripping up these SPY put options today, guys, was really a lot of action, a lot of volatility. These contracts were flying around. You guys can see from my entry and my take profits, I mean, these things were moving 50% in the blink of an eye. So it was a really good day. It was a fun day. We'll see what happens here tomorrow. We will be very susceptible to gap ups and gap downs based on tweets from Trump, based on updates out of the White House, travel schedules and plans from Chinese leaders that are coming here. We'll be very susceptible to that. So I'm not comfortable holding on any swing positions over the next couple of days while we kind of sort this out, because this one little tweet or one little delay in a Chinese travel schedule can make the market gap up or down. So I'm not going to hold on to any swings until Friday, and we'll see what happens with the trade deal. All right, I'll see you guys in chat. Take care.